Hey all, welcome to ShareTreck. This is Raj here. Friends, it's earnings time and I'm working a little bit harder in order to get some numbers out here and also get on top of what's happening, because at the end of the day, I'm a retail investor, and if I'm not on top of things, I'm likely to lose more money and probably make less money. So that said, let's take a look at Illumina and what it means. Let's get started. Welcome back, friends. I'm going to put a table out here which I call as a visual aid, and you can watch that while I give you a commentary on that. At the end of the day, when I look at all the numbers and all the commentary from Illumina, I think that the original sin was the takeover of Grail, the acquisition of Grail against the regulatory authorities' warnings. And Illumina, I think, has paid the price. A little more is remaining to be paid, and that's happening right now. But further ahead, I think it's all blue sky and a clean runway for Illumina to take off. That's my personal opinion, not financial advice. And that said, let me put up this earnings table for you. So here in this table, I have a snapshot of Illumina's financial performance for the second quarter of 2024 compared to the same period in 2023. So core revenue of Illumina decreased by 6% year over year to 1.09 billion. This overall reflects the challenges in the market because of the high interest rate regime. I think that CapEx was constrained, and therefore new equipment sales probably was not up to the mark. And that could have resulted in a little bit of problems. And also we have to remember they had a big divestiture of Grail, and that has definitely dented the company financially. Overall, quarterly revenue also saw a slight decline of 5.4%, indicating a cautious environment for the company's products and services. Despite the revenue drop, Illumina's GAAP operating margin significantly improved to 40.5 from 9.9 last year. And that's where I focus my attention, and that's the basis of my declaring that, in my personal opinion, Illumina has crossed the bridge. It's all set for a takeoff. There will be a little residue of the Grail divestiture, but after that, I think it's all clear skies. So that's my basis. I would like to get your feedback. Please put that in the comment section so that I can understand your point of view. And this, I think, demonstrates successful cost control and operational efficiency of the management. And the non-GAAP operating margin also saw a slight improvement, raising to 22.2%. The company reported GAAP diluted earnings per share of 41 cents and non-GAAP diluted earnings per share of $1.09, providing a positive outlook on profitability despite revenue challenges. And most of that comes from cost control and operational efficiencies, which is, in my opinion, the right way to do this. And there was a substantial GAAP net loss of 1.988 billion, mainly due to significant goodwill and intangible impairments related to Grail segment. And in my opinion, I think there will be a little more of fallout for Grail expenses, maybe one more quarter, and after that things should be clear. However, non-GAAP net income showed a modest improvement. And the R&D expenses and selling, general and administrative expenses decreased, reflecting tighter expense control. Free cash flow declined slightly, but the company maintained robust cash holdings at 994 million. That's a decent chunk of change to have. The revenue for Grail increased by to 29 million, but the segment faced substantial operating losses due to impairments. Overall, the visual aids that I have shown here highlights Illumina's ability to maintain profitability and strong operating margins despite a challenging market environment and significant one-time impairments. The company's strategic focus on cost management and operational excellence is evident in the improved operating margins and controlled expenses. So, what do I think of Illumina? I think that the overall environment is improving with the impending rate cuts coming from the Fed. Now, there are different attitudes towards the rate cut. Many people say that the economy is shitty and that's why the rate cuts are coming in. But the way I look at it is that when rate cuts happen, it happens for a reason. It happens to help businesses to improve their operations. It happens to help startups to be able to generate employment. It happens to reduce the cost of borrowing so that new capex can happen. So I think all those things bodes well for Illumina, because right now the results that they have demonstrated doesn't show a lack of cost control and operational efficiency. In fact, they have doubled down and increased their cost control and operational efficiency to scrape out some margins from this difficult environment, despite a drop in sales of hardware. However, if you notice, their consumables sales have gone up and it has strengthened. What that indicates to me is that most of the users who would have actually bought more equipment had a capex constraint due to the high interest rate environment, and therefore they decided to use more of the consumables on the existing equipment and work the existing equipment longer in order to deliver more services and generate more income. So I'm thinking that those end user companies now have got operational efficiencies because of the increased use of the same equipment, and therefore they are all primed up to do capex and place orders for hardware on Illumina. And that would happen as soon as we have the September rate cuts coming in. That could be the initial momentum that is needed, and there will be subsequent rate cuts coming after that. So I think that Illumina is all poised to get going, and maybe we have another 15 days or a month to catch this share before it starts going out of reach. That's my personal opinion, not financial advice. Guys, it's difficult for anybody to be absolutely perfect about any shares. So I would say with all humility that I could be wrong, but this is the way I'm looking at it. And will I buy Illumina shares if I have money? Of course I will. Right now, I have limited my exposure to genomics, to CRISPR Therapeutics, Altimmune, and then I have Bluebird Bio. So these are in my portfolio at this point of time. Of course, I have a very small amount of Illumina. I think I have 50 Illumina shares in my portfolio. I'm happy with Illumina overall, so I put my money where my mouth is in terms of disclosure. I would like to hear from you guys. What do you think about Illumina? Do you have it in your portfolio? And do you agree with my assessment, or you have a contrary opinion? Please put your rationale in the comment section. We always get to learn from each other as retail investors. And with that, I would like to bring this video to an end. Thanks and have a great day. Bye for now.